All right, let's talk about the Gabion Technologies IPO. Now, this company is trying to ride the massive wave of India's infrastructure boom. But a great story doesn't always make for a great investment. So we're going to tear down their prospectus and separate the hard facts from the marketing hype.
So when you see a hill like this, you probably don't think twice. But this is exactly what Gabion Technologies does. They build the unseen, critical foundations that keep our infrastructure safe. And yeah, it's impressive stuff. But impressive projects don't automatically mean investor profits. We've got to look past the cool engineering and really analyze the business. Let's do that right now.
Okay, here's our game plan. First, we'll get a handle on the business and the market it's in. Then, we'll follow the money from the IPO. After that, we dive deep into the financials, the real report card. Then comes the juicy part, the risks and red flags. And finally, we'll put it all together for a clear, no-nonsense verdict.
So first up, what does this company actually do? And why should we even care about the whole infrastructure story? Well, the company's name kind of gives it away. Their bread and butter is the Gabion. You can think of it like giant Lego blocks for engineers. These wire cages get filled with rocks and are used for everything from holding back hillsides to preventing riverbank erosion. It's a fundamental building block for modern, durable infrastructure.
And their business model is pretty smart. They're not just manufacturing these things and selling them. Nope, they're a one-stop shop. They handle the in-house design, they make the product, and then they do the final installation on site. That kind of integrated approach means more control and potentially better profit margins.
Now, here's the big picture they're selling. They are playing in a massive, and I mean massive, growing market. With the government pouring money into infrastructure, there's a huge tailwind for this entire sector. The market's projected to just keep growing. So on paper, the opportunity looks absolutely incredible.
Okay, so that brings us to the most critical question for any IPO investor. Why do you need our money? Let's follow the cash.
The prospectus is actually really clear on this, which is a good thing. The money is going right back into the business. They want to take on bigger projects, which requires more working capital, and they want to expand their manufacturing capacity. So this is an IPO for growth, not a chance for the owners to cash out. That's a check in the plus column.
All right, enough with the big story. It's time to get into the hard data. Let's see if the numbers actually back up this growth narrative. This is where the truth usually lies.
Okay, take a look at their revenue. From fiscal 23 to 24, you see this fantastic jump, more than 30%. That's great. But then, look at fiscal 25, the year right before the IPO. Revenue actually takes a step back. Now that's our first big question mark.
And guess what? Their profitability tells the exact same story. A big surge in 24, followed by a decline in 25. Whenever you see a company's performance peak and then dip right before they ask the public for money, your analyst alarm bells should be ringing loudly.
This is the key question you have to ask yourself. Was fiscal 24 just a one-off lucky year, or is the business hitting some kind of wall that isn't so obvious from the feel-good growth story?
Now, to be fair, it's not all doom and gloom. The company has actually done a solid job managing its debt. You can see the debt-to-equity ratio has been coming down steadily. That shows they're becoming more financially stable and less risky from a leverage standpoint. That's a definite positive.
But, and this is a huge but, here's the reality check. Despite showing a profit of over 5 crore on paper, the company's core operations were actually burning cash. Think about it this way. They've made sales, but their customers haven't paid them yet. At the same time, they've had to pay their own bills. For an investor, cash is king, and negative cash flow from operations is a major, major red flag.
Okay, now we're going to dig into the part of the prospectus most people just flip past, the legal stuff. And this is where we find some really significant risks that you need to know about.
And there it is, a direct quote. A competitor is suing them for 1.5 crore rupees. And what for? Patent infringement on their core technology. This isn't some minor issue. If they lose this case, it could be a massive blow, not just financially, but to their reputation and their very ability to operate.
And it doesn't stop there. The prospectus shows a pattern of compliance issues, like late GST filings. Now, one of these might be a small mistake, but when you see a few of them, it can point to weak internal controls. You add that to the fact that their whole business depends on winning low-priced bids in a tough market, and the risk profile gets a lot scarier.
Okay, so let's pull all this together. Let's lay it all out on a simple scorecard and see how Gabion Technologies really stacks up.
And here you have it, the classic investor's dilemma. On one side, you've got a really compelling story, a solid business in a booming sector, using the IPO money for growth. But on the other side, you've got some serious baggage. A major lawsuit, cash burn, that weird pre-IPO performance tip, and a spotty compliance record.
So, after all that, we get to the bottom line. Should you even consider putting your money into this IPO?
Now, before we give a verdict, we have to remember what this is. This is an SME IPO. That automatically puts it in a higher risk category. It's often harder to buy and sell these shares, the prices can go wild, and the disclosure rules aren't as strict as for the big companies on the main market. You have to know that going in.
So, our final verdict is neutral, but let's be honest, it's really a proceed with extreme caution. With the patent lawsuit, the negative cash flow, and that suspicious performance dip, this is a high-risk bet that just isn't right for most regular investors.
Let me be perfectly clear. If you're a conservative investor looking for a safe bet, just walk away. The risks here are just too clear and too present. This is an IPO for aggressive investors, the kind who read every word of the prospectus and have the stomach for potential losses in the hunt for big gains.
And that brings us to the final, huge unknown, the price. We've looked at the business, the numbers, the risks, but without knowing the valuation, the analysis isn't complete. So the ultimate decision comes down to this one question. How much of a discount are you willing to demand to take on all this baggage? That's the question you have to answer.